BMO is out with some findings on Canadian home buyers. We are joined by Robert Kavcic, who is a senior economist and director of economics at BMO Capital Markets. Robert, thank you very much for joining us. Among other findings, you say that Canadians sat on the sidelines waiting for borrowing costs to come down. They did, but some people still aren't leaping back into the market because they're worried about the economy.
Well, there are a couple of factors. One is that yes, they are worried about the economy, right? So housing is a big purchase, whether it's as a home buyer or as an investor. And when you have the amount of uncertainty out there from an economic or a financial market perspective that we saw over the last, 2 or 3 months coming into this trade war, that alone is itself psychologically a reason for a lot of Canadians to just say, hang on, I'm going to see how this plays out over the next few months and hold back. The other part of it is that, yes, rates have come down, but the economics of where rates are today, even though they are off the high, still don't make a whole lot of sense for homeowners from an affordability perspective or from an investor from a cap rate versus cost of borrowing perspective. We're not there yet.
And you guys say there are signs of clear underlying weakness. Inventory is building. We just saw that happening in Toronto. I'm not sure if you caught that story. And investors remain absent. So there just isn't an appetite for real estate right now.
Well, as you mentioned, there is plenty of resale supply out there right now. So you look at the Toronto numbers that we just got this morning. Sales are down significantly from a year ago. Active listings out there in the market are up, roughly 40%. So that is kind of saturating the supply side of the resale market. Now, granted, a lot of that is focused on the small, one-bedroom condo unit where the vast majority of the supply pipeline is focused. Mm-hmm. But that's, combine that with the fact that demand has backed off and prices are coming down. And then from an investor perspective, which you mentioned, there's really not a compelling case at all for investors to be out there in the market. So they've completely stepped back, right? So from a cost of borrowing perspective, going out there and buying an investment property at, let's say, a 4.5% cap rate might have made sense at 1.5% borrowing costs. It certainly didn't make sense at 6% borrowing costs, and it still doesn't make sense with mortgage rates back down to, let's say, around 4%. And investors in the past would have been willing to swallow some negative cash flow if they had expectations that prices were going to be 10 or 20% higher from a year from now. Mm-hmm. But what's happening, prices are coming down. So that expectation has been cleaned out of the market too. And the end result is that end use home buyers are on the sidelines and the investor has more or less become completely absent from the market.
We heard from Ron Butler of Butler Mortgage yesterday. He was particularly focused on the Toronto market, but he said there's just no appetite or very weak appetite for these very small condos of only 500 square feet or so.
Oh, I totally agree. And why would there be, to be honest, at this point, right? So that segment of the real estate market was, for a point there through the height as we got into 2022, was almost entirely driven by two things. It was expectations of higher prices, and it was this expectation that we were going to have indefinitely high population growth, right? And so two things have completely changed. We've seen very restrictive caps on non-permanent residents from the federal government, which is dampening rental growth at this point. Rents are down across a lot of the major cities in Canada, and especially the GTA. Right at the same time when we have probably 95,000 units under construction in Toronto, and about 85,000 of those are condos or purpose-built rentals. So if you're an investor looking at that dynamic playing out with the demand curve backing off because of population caps and the supply side seeing a very, very rich pipeline of rental product, that rents are going to be lower a year from now or 2 years from now. So without prices rising, there's really not much of a case to be made for an investor to step into the market today. And that's what you see.
And finally, the millennials, those poor old millennials, who follow Generation X, the oldest of them are bumping up against 30 now. The youngest or the oldest are something like 44, 45. A lot of them say we've just missed our chance to buy houses.
Well, if you're in the leading edge of that cohort, you've done great, right? So you got in before affordability really got away from Canadians. If you're in the middle of that cohort towards the back end, and the peak of that cohort, like just from a raw numbers perspective, I think is about 34, 35 years old right now. And the real difficult challenge in all of this, and this was entirely predictable going back over the last decade, and it's something we talked about almost ad nauseum, is that as that cohort matures and starts to have 1 or 2 or 3 kids, what are they looking for? They're looking for single detached housing with backyards. And for the last 15 years, because of development practices and various policies implemented across Canada, and especially in Southern Ontario, we've crowded out almost all of the construction of single attached housing in favor of small 1 or 2 bedroom condo units. So we're at this point now where we have a significant mismatch between what we need demographically and what we've actually have built into supply pipeline. So from an affordability perspective, for those millennial families with that second or third kid, there's not a whole lot to pick from still, even though we have a ton of 1 bedroom condo supply coming onto the market. So that dynamic is going to be with us for some time still, I think.
Robert, thanks very much indeed. Robert Kavcic is Senior Economist and Director of Economics at BMO Capital Markets.